I want to talk about anyway.
Hello, folks. It's Tuesday. It's 10:30 a.m. on the West Coast, 1:30 p.m. on the East Coast. Good afternoon, morning, evening, wherever you are. If you want to listen to this live, go to the Acquirers Podcast YouTube channel, click the notification, and it'll send you an email when we go live, or you can just find this site. How are you, gentlemen?
I'm doing okay.
Smoke has cleared a little bit, so my spirits are up.
From the portfolio?
No comment there.
Mine's still on fire.
Literal air breathing.
Hey, we got some good Omaha, Chapel Hill, London, Toronto, Cincinnati, Rio,
Worldwide.
Tulsa. We're worldwide, baby.
I'm just looking at my portfolio, which is exactly what I shouldn't do.
Yeah, don't do that.
Stay away from the light, Bill. Come.
Georgia, Stockholm.
It's all right.
I think it's my turn to do the intro this week.
Indeed,
I haven't done it in like 4 months or something. Welcome to Value After Hours with my esteemed co-hosts, Toby Carlisle and Bill Brewster. Toby, what do you got for us today?
Yeah, I've been updating some charts. The French data is always a little bit lagged, but I got the July data. So I ran the free cash flow deciles against each other, and so I just got some interesting little findings there that I'll be talking about.
Parlez-vous français? Oh, Fama French. Okay. Bill, what do you got?
I'm going to talk about how valuation cobbles the mind.
What is cobbles?
Can't wait for that.
Means it makes you stupid.
Cabbages.
Hobbles.
Whatever.
Cabbages. Yeah, it's
Whatever
clearly
it
that the
does.
valuation is cobbling our minds.
I don't know what it's doing. It's clobbering my mind.
What are you talking about, JT?
I am going to be talking about investment cicadas.
Cicadas.
Yeah, you're right. It definitely doesn't cobble the mind. That would be to put it together. Destroys people's minds.
The clogged toilet of Bill Brewster's mind.
That's right.
Well,
Yeah, I need to plunge it bad.
Bill, do you
All
want
right,
to...
back after this.
Right back, yeah. Bill, do you want to
Do.
do you want to do yours? Because then I can shit all over it straight after you do it.
Okay, that sounds good. First of all, shout out to Curate for abiding by the valuation rules that I'm about to disparage. So here's the thing. People, I think, and I'm just going to talk about me. First, I'm going to turn my mic down just a little. Hey, how's it going, folks? I think that so for me, when I look at some of these highly valued companies, I sometimes impute some of my hatred of the valuation into the analysis of what the company does. And I think that it would be more beneficial if you suffer from my disease to not focus so much on where something is trading and try to figure out why it's trading where it is. Whether or not you think that it makes any sense is sort of a different issue. But there's a reasonable shot that if it's valued highly today, there's probably going to be a time in the future that you may want to buy it if other people find it a little less appealing than they do today. And doing the work today, when you may think that nothing's going to bear fruit, could present you with a really good opportunity for return on time down the road. And I guess that the example that I've seen today, and some of this is just me imputing silliness into people's tweets, and some of it's people not really thinking, and some of it's whatever. But, like Peloton, I think is a pretty good example of a company that, like, I personally, I would not pay $27 billion to own this company. I think that's kind of insane. But it's a product that I use, and I understand what the bulls see. And I think that, like this Amazon entering the fray is easy if you hate Peloton to say, oh, Amazon's coming, Peloton's going to die or something like that. And I think that the way that I see it, which obviously is the correct way and everybody else is wrong, but I think that Amazon entering definitively would reduce sort of your TAM But I don't know that you can argue that a bike that's priced like Peloton is, and that subscription is this large market share anyway, right? Like, I mean, that's sort of by definition niche. So, just because a Ford Fiesta enters the market does not mean that people are going to stop buying Cadillacs. And I think that, I mean, I don't, it's,
Sorry,
well,
Jeff.
it's, what, Bezos? Come on. Like Amazon is some lifestyle brand. It's just like Walmart. It's just bigger and on the internet. And their prices aren't even that good, Jeff. You want to get back to something, fix your pricing. Anyway, I understand that they got center aisle stuff and whatnot, but I just sort of, I think it would be more beneficial for myself to not look at some of these valuations. I mean, maybe it's a good like hunting ground, right? You screen on returns on capital and then just start researching. I'm sure almost all of it is going to be outside what I'm willing to pay, but it would probably reduce some of what I'm at.
A good hypothetical question to ask is, like, when would be the optimum time in a research process to introduce price?
Probably at the very end.
I think that's probably right too. And yet, what percentage of people do you think look at the price at the very end? Like, they come up with an independent valuation and then go look, see, does the market agree with me or not?
Well, part of the reason for that is that it's a lot of effort to go through and do a full valuation. And that by the time you get to the end of a full valuation and then you find, I'm prepared to pay $20 for this thing. Where's it trading? Holy shit, $350. Like, that's,
yeah, whoops.
Now it's useless. Well, it's not necessarily useless, but it's just, I understand why people do it the other way
Just the friends you
around.
made along the way.
Well, I think that there's two answers to that. One, you may not be looking at the world right? So there is some reasonable argument to be made that maybe you're undervaluing something. And two, like, yeah, a lot of stuff. I mean, it's like the old Buffettism. You find things wildly overvalued in the market often, right? So,
but the reverse is also true.
That's the game.
The reverse is also true. You find stuff that's just it doesn't make sense why it's trading where it is. And sometimes if you follow the reasons why, like, then you go out and explore the reasons why. Like, that's not helpful at all. That's just cabbages your mind up.
Doesn't cobble it, I'll tell you that.
Isn't that fixing shoes?
No, like, it's putting together. But so
So
I guess you would cobble a shoe.
Sounds like we need to be a little bit more thoughtful in general about when we introduce price in our processes.
Yeah, and I think the same is also true. Like, a lot of people, like, I don't know, like Markel was a compounder until its stock price went down into the right. Now you don't see it mentioned at all, right? Like, shut up. Like, stop looking at a stock price and telling me what the company does and how great the narrative is. It's ridiculous.
Dude, you just went against 2020 so hard.
No, I know, but that's the truth, right? It's like, I mean, A.O.
So
Smith, that was just this fantastic company that just compounded and compounded and compounded all over Twitter while it was, going up into the right, rather, and then, down into the right. Who needs water heaters?
Yeah, I think that
what are we doing?
I think that we're at a funny point in the market. I think that the value bucket has never looked higher quality. I'm just astonished at the stuff that's in there that looks to me like if it was trading 10 times higher than where it is, then people would say, well, now it's a compounder. And the fact that it's not trading 10 times higher, it's trading cheaply because the stock's fallen off a cliff. People are like, well,
stock shit.
Yeah, not going to buy it. It's just sold because it's been sold.
Well, I think it's the old. I think Hal Munger said to Buffett is he said, "You've often said to me that it's not what floor you're on; it's the direction that the elevator is going that people care about." So, like, I mean, it's like this curator.
He's talking
thing,
about
like,
the fundamentals, right?
No, well, people are like, well, what's the terminal value? I don't know what the fucking terminal value is. Like, you tell me, but I'll tell you what, the equity's too cheap today. Like, you're worried about 15 years away. We get to 15 years from now, my money's out. But, that's I think that people are more concerned with certainty of where the trajectory or the perceived trajectory of a business is going. And that is obviously why you get a high multiple. I mean, that makes sense, right? People pay for their perception of certainty. But there's also another way to look at things. It says, like, people were asking Buffett, like, I don't know, 5 years ago, should you sell Geico? Like, imagine Berkshire this year without Geico. No, you should not sell Geico. Like, change takes a long time to happen a lot of the times.
Should Buffett sell Apple because it's run up so much?
I don't know. You should probably consider a collar or something.
Oof.
What do
That's
I
a tough
know?
one.
I sold it at like $1.2 trillion. I'm an idiot.
You left a whole trillion on the
I know.
table.
So why do I deserve to have an opinion?
My view is that he shouldn't ever sell. He said that it's one of his three big businesses. He's never going to sell it.
You could maybe trim a little. I don't know. It's a pretty big part of the portfolio.
Well, sell some options against it. I mean, I know he doesn't really play that game, but do
That's
that.
right. Yeah. Or a convertible exchangeable debenture, something.
The problem
Get
is
some
that
liberty in you.
you sell the options at $1.5 trillion, and then it runs to $2.5 trillion, and you're out of the money.
Well, you just deliver the stock.
Well, but he doesn't want to do that, right? Doesn't want to incur the tax. He's not a trader.
Yeah.
That
He's
is an
a
interesting
trader.
question. What would Berkshire's portfolio look like today if there were zero capital gains taxes? Would it be much more? Would he turn things over more? Would there be like, the names would not sit there like they have? Would he have sold Coke in like '98? I'd be very curious what it would look like if there wasn't that other component that sort of keeps him welded to the cockpit.
I bet that if I don't know that taxes matter as much as other people may think. That
to Buffett,
said,
he writes about it a
I
lot.
think they
no.
Yeah,
That's no. Okay. First of all, thank you for cutting me off, asses. Secondly, my comment more had to do with I think that Buffett would probably turn over stuff more in like a limited partnership. I don't know. He might perceive that there are benefits to Berkshire that outweigh the tax consequences of holding a stock too long because it creates a perception of forever ownership that he thinks outweighs the cost of the taxes. That's the most accurate way to say what I mean. But yes, he hates paying tax as much as John Malone does.
Do you think Malone's got a more clever way of dealing with it?
No, I just think Malone is like way more, he just boasts about it more. Like, I think Buffett's as shrewd as anyone at avoiding taxes.
Yeah,
I just don't
fair.
think he like goes out there and tells everybody about it.
But he doesn't have a whole lot of tracking stocks, and that's just a way of avoiding tax, right? It's a way of getting it out of your portfolio.
But he's doing all kinds of like share swaps. They approved like that preferred share in case people wanted to sell on a tax advantage. But I mean, Buffett hates taxes.
Yeah, I mean the energy company is just a huge tax shield, right?
Dude, Buffett, help your secretary.
All those regulatory credits.
Yeah, I mean he loves not paying tax. There's everything he does defers taxes.
Hey, you know who else is really good about not paying taxes? Elon. No profits. No. He's getting money back from the government.
I'll tell you what,
Smart.
man. That's an argument for SAS. If you think that tax rates are going up, they're not going to pay taxes for a while.
Because there's no cash flow?
Well, I mean, look, they're investing through sales. Whether or not how much of that's growth and sustainable, I don't know. But I mean, it is definitively true that growth companies pay less taxes.
Speaking of Tesla, Tesla's little brother Nikola has vaporized itself, or Trevor Milton
What
has.
happened?
Trevor Milton is out, and there's some sort of nasty allegations swirling around. I don't know how real they are, so I won't kind of comment here. But there's some nasty allegations out there about him too.
Do you know a nasty allegation that I heard on the audio interweb recently? I heard that you had to that you went at Massa, and that his Twitter alter ego came at you to demand a retraction.
He's on me today as well, because the option trade. I haven't fully read the option trade stuff that came through. I'm busy this morning doing other stuff, but I'll take a look at it.
I didn't want to mess with that dude. That dude will come at people on Twitter with a vengeance. I don't know if it's Massa.
It's good.
I don't
I'm here to
know if
learn.
it's
I'm here to
Massa's
learn.
cousin. I don't know if it's some dude sitting in New York. All I know is he tweeted out that we made an enemy, and I was terrified. Then I was cracking up. That was a very funny day on the Twitter machine. Thank you, Massa Sun Capital.
Yeah, looks like this. It's an interesting trade. So they bought the options, bought $4 billion in premium across 7 high quality tech companies, and then they've sold some further up out of the money. We don't know much more than that. I haven't had enough time to read through them. it could be a very shrewd trade to protect those positions. So I don't know. I'm going to take a close look.
Tangentially, if you're not on Twitter, get on Twitter. I'm about to make another Twitter comment. That account, the funny thing about that account is how much he loves Masa and how much he hates Netflix. And I see a lot of things that rhyme in those two things, but that is neither here nor there. And I am about to get blown up.
Yeah, Corey Hofstein's got a nice comment up on the screen. Do you think that Trevor's undoing was the HTML5 supercomputer?
I'm not sure that I fully understand any of this. I don't even know what's going on. Here's my problem with Nikola. I don't think it was a fraud. Like, I know that they had a truck that rolled. It was never anything. It was just vaporware being packaged and sold to everybody. And if you didn't see it, like, they had zero revenue.
What's the sort of shenanigans that are fine from microcap, right?
My beef is Ubin. Come on, Jeff. That's who I'm mad at. I don't care about all the fraud stuff. I thought it was all bullshit anyway.
Yeah.
I didn't know it was like blatant fraud, but I mean, I don't know what the line is thin.
You just expect a little bit more from a $30 billion company, though, don't you? Like, if it's a $300 million microcap, then all of that stuff is just hustle, and it's great. If it's a $30 billion company, it needs to be a little bit more, a little bit less securities fraudsy.
Dude, people need to reread, what is it? Extraordinary Delusion, or what is it? The Madness of Crowds. What the heck's the title?
Extraordinary Delusions and the Madness of Crowds.
Yeah. Charles Mackey.
Yeah. I mean, I don't expect anything when I look at evaluation other than people are going nuts.
JT, do you want to give us some veggies, or do you want me to do mine?
Why don't you do yours? Because I want to hear what's going on with
along the same lines,
price to cash flow. Yeah.
So I have some presentations coming up, and I had to just go back and look at the data again for price to cash flow. This is the French data. It's available free online. They divide it up into terciles, quintiles, deciles. So you can have a look at the low cash flow yielders versus the high cash flow yielders, which are the value stocks. The low cash flow yielders are the growth, glamour, expensive, whatever you want to call them. Data runs from July 1951, and it now goes through to July 2020. So we get to see what happened in March at the bottom, and then sort of the recovery through to July. The data's always a little bit lagged. It takes a while for them to collate it. So speaking of the deciles, the value decile, which is the 10% that are the cheapest versus the 10% that are the most expensive, it got 62% behind from the drawdown, which started 2014, 2016. It really started in 2014, but there was a catch up to 2016 where it just kissed the growth line and fell back away. So if you're a value guy relative and you're investing in that value, the high yield cash flow portfolio, you're 62% behind the guys who are in the low cash flow yielding decile, which is a big margin.
Hard to keep assets doing.
Very hard. It's the biggest drawdown in the data by a long shot. The other ones are in the order of like 24%. Like 2000 gets down to about 24% behind, and then from sort of the bottom in 2000 through to about 2014, say, value goes up 5 times relative to growth. So you did much better being in value through that period of time. The value portfolio has now run from 62% behind to 56% behind. So it's made up a little bit of ground over those 4 months. And we're all
back in the game.
Yeah, well, it's not much.
So you're telling me there's a chance.
It's not much, but it's not going in the other direction, which is a good thing.
I'll tell you what's interesting and that I've been thinking about usually in the shower, some of my good thoughts. A lot of like this SaaS revenue growth, and this is a huge generalization, but a lot of the value proposition seems to me to be some sort of shared infrastructure of software or some sort of efficiency that is being created in the system or whatever, right? Well, there's a lot of these like slow growth like companies that people think are just like dog shit. You can get a lot of below the line growth if these SaaS companies are half of what people promise that they are. and the efficiency that could be taken out of the SG&A line item, and yes, even redirected to some of these SaaS companies. Like, it does not have to be between the two companies, who probably would lose in the scenario that I'm thinking about is labor, which that's a whole nother issue. But I mean, I don't know why a lot of this technology doesn't continue to help margins increase over the long term. And there's a couple ways to grow. I mean, I don't necessarily think that bottom line growth should be valued the same way that top line growth should. Nigrin, if you're listening, holler at me. I'd like to debate you on that topic. But that's like the I don't know. I think people could be really surprised 5 years out where some of these companies that they sort of are like, we'll see what the cash flows do. I mean, I think margins have increased and stayed higher than people thought, and I think that this is part of the reason. I don't know that it's got to stop. It's not the whole reason, but it's part of it.
Margins are higher because SaaS pulls out some of your cost in the SG&A line. Or because...
Well, yeah, and I mean, just think about how much more efficient like the cloud is as like shared services and something that you can flick on and off. And yes, there can be margin there, but you're also removing a lot of inefficiency from, the on-prem equipment that you may need, or the guy in the software room, or I don't know what the IT rooms look like in these big companies or whatever, but like those guys can be somewhat offloaded to a company that specializes and can monitor. CrowdStrike, for instance, my understanding of one of the benefits of their product is they can look across the cloud and implement a solution. You don't have to hire a bunch of guys that are looking for some random thing that they don't know what they're looking for, right? Like, there's efficiencies that can be put into the entire system that can benefit both companies. Again, I don't know that the labor wins in this scenario, but it'll be interesting to see.
Does it benefit, as a consumer of it, does it benefit your competitors as much as it benefits you?
Yeah, I don't know. I mean, this is like that's the $1 million question.
And
right?
If it does, then aren't you all just standing on tippy toes at the parade?
You may. I don't know. I mean, I don't know. This is part of what Munger says Buffett's a genius for, right? Figuring out when the technological advance benefits the owner versus the user.
Right, and the prices today say it's all the owner and not the user as much, right?
They certainly imply a lot of growth for a long time. I mean, the thing that gets me uncomfortable about the implication, and it's obvious, I mean, I don't know what I'm talking about here, obviously, right? But like when you're growing from a small base, you should by definition be able to grow fast. Some of these valuations imply a lot of growth for a long time, and that becomes a different treadmill speed.
There are a couple of good threads about that recently, and it's similar to the stuff that JT had earlier. Just looking at the base rate for growth rates when you get bigger, it becomes increasingly hard to virtually impossible to compound at 35 or 25% a year once you get even to $200 million in sales. Like, the number of companies that can do it is like, you can count them on one hand if you grew up around Chernobyl. It's like 7.
I thought you would get more fingers in that situation.
He did.
It's one hand.
7.
Oh.
You sick joke. Anyway, but it did crack me up. I guess that if I were pushing back on it, I'd say you got to apply it to a global scale, right? So I guess that in theory, some of the first movers, if they can truly get over borders, should be able to grow for a little bit longer than maybe the data would suggest, backwards looking. But I don't know.
It's going to be interesting seeing how you do this, how you do cloud over borders.
Yeah, well, you start to get into like sovereign issues, and I mean, it's not
GDPR,
not so
privacy.
Look at this TikTok thing and just how gross that's turned out to be. I mean, what a mess.
Well, look at Facebook. Forget about TikTok, because that's become like
just
fully
for some
politically
stupid consumer app that no one cares about in 2 years.
Is Facebook a U.S. company or is it a global company?
Well, it's literally resident in the States, so it's U.S.
I don't know. I would argue that some of their policies are actually much more globalist, or like free speech. We're not going to say who's right and who's wrong. You start to get into elections. I mean, it's already hairy. I don't think it's going to get any less so.
I mean, whose jurisdiction are they in? They're in the U.S. jurisdiction, so it's a U.S. company.
I understand what you're saying. I don't think investors are looking at it as a U.S. company. I certainly don't. I look at it as a global company.
I understand that part. I understand that, like where the sales come from, where the businesses are. I'm just in terms of like where your legal risk is. That's where you
all the EU issues, right?
That's true. But I'm sort of riffing on the TikTok. The TikTok topic is, there are if American politicians get upset with them for an antitrust thing, which is a uniquely US term, then they're going to be subject to antitrust in the US, right? That might be a different, like the EU has a different monopoly.
We don't have that anymore anyway, so
it's just not enforced.
Yeah.
Well, and like I guess I'm not even trying to. I think we can all agree, maybe not, that Facebook is being weaponized for some propaganda from all parties, like everywhere, right? You look at, I think that we can probably agree that some foreign actors were using it to spread COVID misinformation. Maybe we can't agree on that. If we can't, then I got to have a different discussion with people. But I don't know if you are using a technology company that is a resident of the United States to spread misinformation about a virus in the United States, like that seems like it's a hairy issue to me. I have no idea how all this stuff settles, but
some mother of two in Kansas is
it's above my pay grade.
Posting misinformation on Facebook to her 23 followers.
I mean, dude, it's easy to say, it's easy to make fun of, but I think that it's where information warfare takes place, and I think being blind to that is kind of.
I just don't log in. That's how I avoid it.
Dude, I'll tell you what, I don't log in anymore, and I don't miss it at all. I think I would miss Twitter a lot. I like Facebook. Nothing is removed from my life from leaving that, and it's not even like I'm deleting Facebook. I could care less. I just think it sucks.
I think Ted Kaczynski might have been right, and that we got to roll back some of this technology.
You like the theory, not the method, though, right?
Yeah. That's true. Maybe a little overboard with the method.
I'll tell you what brings me to Facebook is WhatsApp, and I wonder if I'm probably even counted as a daily active user. That would be a joke if they roll my usership into their metrics.
Oh, they do.
Yeah, that would be silly.
I put a few of those things to Marcelo Lima when he was on the podcast, and he said no, they split all that out. It's not.
I think they rolled it in now.
Did they? Okay.
I thought they collapsed it, but I haven't looked in a little bit.
None of us know. We're just making shit up as we're going along.
I think they collapsed it. I'm like 65% sure.
The manifesto, Ted Kaczynski's manifesto, is a good read. Yeah, I had a look at it a long time ago.
Oh my God! Now we're demonetized, guys.
I downloaded it. Yeah, I downloaded it from the internet.
$2. I said COVID. You said Kaczynski.
This one's gone.
I'm sure the word manifesto got us demonetized somehow.
Oh yeah, game over.
All right,
oh Lord,
JT.
It was fun having a podcast with you guys. I appreciated every moment.
Podcast.
We had a good run. All right, let's talk about investment cicadas. And I'm going to start off with a little quote that I found that I really liked. It's from John Wheeler, who was a theoretical physicist around the same time as like Feynman. They worked together on the Manhattan Project. He said, "Time is nature's way of keeping everything from happening at once." Now,
that's a good line.
It is really nice, isn't it? So a cicada is like this little insect, right? If you don't know. And there's a species of cicada that has the longest lifespan of any insect. And most of its life, it lives underground as a nymph, and it sucks the juices out of tree roots for 16 years, not doing much. And every 17 years, it will emerge as an adult cicada, and it will, these vast numbers, it'll mate, it'll lay eggs, and then it'll die. And curiously, there's another species of cicada that emerges every 13 years. So what do the numbers 13 and the number 17 have in common?
They're both prime.
Good job,
Dang.
Toby.
Nice.
So both
done, dude.
Both, and we didn't give him that answer beforehand either, by the way. Yes, they're both prime numbers. And what's interesting about that is that one theory is that this has to do with actually parasite avoidance, a parasite on the cicada. And why that maybe makes some sense is if you imagine a parasite that had like a life cycle that was every 2 to 3 years, there'd be a lot more potential for overlap because of the way the numbers divide together. So nothing divides into the number 13 or the number 17. That's what a prime number is. It doesn't only divide it by 1, right? So if a parasite had a 2-year life cycle, it would only meet its host every 34 years on average. And, it gets really hard for that parasite to evolve because it would require it to sit there for 16 years with no host, right? So the cicada's really long life cycle and being a prime number protects it from parasites potentially. And what's interesting is that they've never actually found a parasite on the cicada. So it's almost like the dog that didn't bark. Like the guess is that it's because of that. So, all right, what does this have to do with investing tenuously? The idea is really that nothing works all of the time in the investment world. If it did, there would be someone who would start copying you or even maybe being a parasite on you.
Right.
And so you need these long periods where it's hard and you're underground just sucking on the tree roots and you're you're just a little nymph before.
Dude, I'm not sure that you're handling this whole thing okay.
I know. I'm not. But let's think about
there's a tree root.
Let's think about Charlie Munger. Like he is an investment cicada the way that he's run Daily Journal's portfolio, right? He sat there in T-bills sucking tree roots for a long time, and then it got to be time to push the chips in, and he bought Wells Fargo and Bank of America like 2010, 2011, paid really good prices for it, and had terrific returns over that whole time period because of a couple of little moves during a very unique window. And he had the patience to do that.
I will tell you what, to the young kids that listen to this, that strategy requires massive balls.
Well,
you need to be a little bit older, I think, to put that one in. You need to be a little bit older. You need to have seen a few cycles.
They do it, though. Like Munger, the way that they run concentrated portfolios, one of the things that I think is somewhat dangerous about what people hear Buffett say when he says, I'd have 50% of my portfolio in my favorite security is like, that's Buffett. Just be very honest with yourself if you're as smart as Buffett.
Yeah, you're not. However, what if I think the three of us need to start a SPAC with the Express,
the VOS
mandate of investing the money one time per decade.
Yeah.
And otherwise, we just sit in T-bills waiting for the opportunity.
Can I just
propose
an alternative solution to invest the money in after-hours activities?
Sure.
To go along with the name?
That's what the management fee's for.
Okay, that's fair. That's fair.
But we wait once a decade. We'll deploy in peak pessimism.
Do we charge a 6020?
0620?
No.
6020. That's good. People are just like, oh, that's a 0620.
Yeah, I misread the document.
It's a 2020 SPAC.
Yeah, 6020.
Can we just go back? So the 13-year and the 17-year. If you're the 17-year cicada, are they all coming out at the same time, or are they sort of this one species? They could come out in any given year, but it's the same species as on a 17-year cycle.
The same species is synced up together.
They
on
are all
17.
synced up together.
Yeah, they come out in these like cloud of bugs, and they do their business, and then they die, and then their kids go back underground for another 17 years, basically.
I lived in an area that had cicadas as we call them. They come out. I think it was on like a 7-year cycle. I think that's also prime. Yeah. So I saw a few.
Watch it.
They come out like a cloud, and then they're pretty big, like they're an inch or two long, and then they leave their husks all over the place because they're growing so fast and splitting and disappearing. So as a kid, you run around and collect these 1 or 2 inch cicada husks. Pretty fun.
What do you do with those?
Well, like it's just like a
Australian stuff.
Yeah, just to do Australians.
It's just a cool. It's a cool looking thing. It's like a little this pretty big insect kind of shell.
How far inland were you growing up?
Probably
all the way.
Probably like
right in the middle of the desert.
300 or 400 miles.
That's why I like Value. It was the only book at the library.
It was. There were no books in the library.
Yeah. What library? How cool is it though that nature like found prime numbers on its
Dude,
own?
it's wild. The Fibonacci sequences are everywhere too.
Well, there would have been cicadas that were 1, 2, 3, and so on, and those ones just they got full of.
They got parasites.
Full of the parasites. It's almost like a reverse black swan, right? Like it's the good thing that happened to. I guess it's a little bit more predictable than a black swan, but it's 17 years is a long time. Like that. You don't see many of those in a human life.
The 16-year parasite, that's like an overlap of every like 272 years. It's 16 times 17. So, dude, there's no way the parasite's gonna make it that long. That many generations to get to you. I mean, it's genius, really. I love nature. It's so amazing.
Yeah, that's astonishing. The parasite thing is interesting too, because there are. I mean, the 13F filings that hedge fund managers or big institutional investors have to file, they create parasites. They create hangers-on. I'd be guessing that there aren't many value parasites left because the performance has been so bad. And we were talking about that.
Bill says it's the first inning. I don't know.
Well, maybe
of the melt up.
It may be.
Oh, okay. But the value parasites, though, do you think that those have been sloughed off yet?
Well, I mean, I look at the whale wisdom 13F holdings, so you can see who are the most popular ones in there. Beaupost continues to be one of the most popular in there, which I found I was a little bit surprised by that because it's not like that's not a particularly popular name.
Weird stuff often too. Yeah, that is surprising.
And you don't see the whole portfolio because they've got such a big private equity debt portfolio there as well. You just see
real estate.
It's still pretty big though. And it's very, very concentrated. Like they have 17, 20% swings at stuff when it comes in there. But I was surprised by that because I would have thought you got to be a little bit inside baseball as a value guy. To be a value guy, you're a little bit inside baseball. To be a Beaupost, Seth Klarman value guy, you're a long way inside baseball, I would have thought.
Mm-hmm.
Yeah. You think the average Robin Hood trader knows who Beaupost is?
No.
You think they're going through those 13F filings? I'm going to load up on eBay, whatever their biggest holding is.
Nope.
I don't think so.
It's a chart of a price, and if that looks like it's just going to keep going up in a straight line, you buy it.
Yeah. I mean, that actually makes more sense to me than value investing.
Full analysis right there. Full analysis. Done.
I need to be careful with what I say about this company.
Which one?
Robinhood.
Oh, yeah, yeah.
Yeah.
All right, folks, throw in your questions. Let us know what
where we're wrong.
Yeah, the other thing about being the cicada, man, like that Munger strategy, one, you got to swing when you swing, and two, you got to be comfortable with cash drag. And emotionally, those two things are not the easiest thing to handle.
You couldn't do it in an open-ended fund.
I'm just saying, even if you're just like somebody that's listening to this and you're interested in investing and you think like, oh, I think I might be able to pull that off. I mean, I'm telling you, as somebody that ran with cash drag for a while, it's not the easiest thing to deal with. Now, that could be a market cycle talking, and I get that, but, it's tough.
It's a permanent capital appropriate move. Doing that with other people's money in a normal world is, I would say, very, very difficult to execute.
That was one of my beefs with that manager that I left, right? Is like I gave them money to allocate to an equity portfolio, and then we were 30% in cash, and then our positions would go down a little bit, and I'd be like, yo, if you're wrong, sell this thing, but if you're right, like I got 30% in cash sitting there that you should come over the top with, and they just wouldn't do it.
So I got
portfolio construction reasons. Like, dude, fuck that.
First question: best investing books you've read?
Oh, Deep Value. I'm not even bullshitting. I'm not. I love Deep Value. Then, I mean, like the stuff by the marathon guys, capital returns and capital account returns is much more easy to get. I love those guys.
I always felt like Nick Gogarty's Nature of Value was underappreciated. Just a lot of really smart things in there that you don't see other places. A lot of the stuff's kind of regurgitated everywhere else, but this one was, I thought, fairly unique.
I have
Quality
that and haven't read
Investing's
it.
a good book.
White Sharks of Wall Street, Diana B. Enriquez, just about the 1950s corporate raiders. Great book because it talks about how some guys got their start buying up bankrupt bonds on the cents on the dollar. Launching SPACs.
I like Lowenstein's book. My boyfriend Cisco says Snowball is much better.
Snowball.
I haven't read Snowball. I guess I need to. Yeah.
It's more comprehensive. You haven't read Snowball?
I'm not kidding.
You haven't read
folks.
Snowball?
For real, spend the money on Deep Value. That is a legit book.
What's the name of your
The youngest, Warren Graham. That's my homie.
And you haven't read Snowball?
Nah, man, I know enough. I mean, I'm gonna read it. I got other stuff I gotta read. There's the other thing I think you have to have if you are like into this way of thought. I think you got to read Cialdini, Influence the Psychology of Persuasion. For me, I mean, like Curate for me is entirely a psychology bet. I couldn't have put a lot of the stuff that I have together without studying a lot of psychology. So
I'd give a shout out to James Monier's The Little Book of Behavioral Investing. That gives you a really nice overview of all the biases and how we fall prey to them. There's a lot of information packed into a really nice, dense little package.
I'm smirking right now because I feel like Hansel when I'm about to say this, but like Big Money Thinks Small, I haven't read it all, but I think it's probably pretty good. Like the chapters that I have read, I'm like, oh, that's a pretty good book. Anyway, that's enough.
Little segue with Montier here. GMO's 7-year forecast shows everything losing money over the next period except for emerging market value.
Please. Emerging market value in potassium or some BS. Get out of here. And salmon farming.
Is that what he's saying?
Come on. Yeah, it's like what he loves. He loves fish. He does. He legitimately loves fish because he thinks it's a sustainable protein source. I watched him give a whole talk on it. And he loves fertilizer. He likes potassium and or phosphate and potash or whatever. I get it.
Timber. That one disappeared quietly, didn't it, from the
yeah. I don't know. I'm
forecast.
about to get my face ripped off going at those guys, but they have been saying this for a long
I mean, that has to be troubling though. If you're CalPERS and you look at that and you go, I got to come up with 8% returns per year, and this is these are the ingredients I have to mix together to get that.
You just keep on writing it into your book that you're going to do that. You keep on writing it into your report.
You got to load up on private equity and VC so that they can tell you the numbers that you want to hear, right?
Yeah, until you got to sell.
We're reporting it'll be an 8% return.
I mean, look, it is very possible that we enter a world where like all the incentive structure is to take a 1% free cash flow yield to a 0.5% free cash flow yield and that to a 0.2% free cash flow yield. I mean, the prices can go up like crazy when your denominator's that low.
Who's buying
and
that?
I don't, people that have to, man, CalPERS. They can't just stop buying. Like, they can't. What are you going to do? You're going to raise taxes enough to fund yourself on a current basis? Like, they can't. It's a game that we cannot get off of. So the question is, when does it collapse, and are you smart enough to make that bet? If you are, you'd be really rich.
Whoever gets that right is going to get that bet right once in a row.
That's exactly right, and they'll be the next Buffett. People write books about him.
Yeah, it'll be the next Paulson.
Waiting to happen.
Good question from Corey. Might be a little bit too much for me, but you two guys can have a shot at it. It has all the weaponized gamma options, tail wagging, underlying dog in tech names in July and August change the way you're thinking about markets and investing.
Repeat that real quick. I was talking about how smart he was, and I wasn't listening to the first part.
It has all of the weaponized gamma, so option tail wagging the underlying dog in tech names in July and August, whether that's through. So has it changed the way you think about markets? I don't know whether. So I'm a little confused on it because I don't know where it's being driven from. I saw Robinhood, there's a lot of punting going on in options. And there are some younger people in my family who I've spoken to who are all doing the same thing. I was telling them some of the stuff that I like and just got laughed out of the room. And then they wanted to know, which options. And so there's a lot of punting going on in the options market. But I don't know what kind of impact that's having. I've seen several different analyses.
That's Australian for gambling, by the way.
Yeah, gambling. That's it, punting.
I mean, I talked to somebody who I have a lot of respect for, and he said that right now reminded him a lot of 87, not in the way that like he thought that we would necessarily crash. This was following March, but it was right around when I was dealing with the Robinhood stuff. And he had a lot of concern about the amount of options trading going on. And he's not somebody that I just not like pay attention to. This guy knows markets.
The problem that I have with analogs of markets, for ones that people have lived through, is that there are so few of these. Like the N is so small. To say that this is like 87, I mean, 87 was in a reasonably undervalued market. Come off 82 low through 87. Maybe it reached Cape on an average basis, sold off, finished the year higher. It was just like a technical kind of market
structural pickup.
Yeah, exactly. That recovered. Whereas I think this is a different type of market. Like for one thing, interest rates are in a totally different place, potentially going in a different direction, although it seems to be still going in the same direction. Valuations are totally different.
Does anybody have a good Mr. Market analogy for this style of punting? I don't know if it's.
I don't know, but Corey, the direct answer to your question is what changed, or what I was able to sort of observe, and I don't know if it's the gamma thing that you referenced or not, right? But how quickly people's time horizons compressed to tomorrow in March, and now how quickly everybody's talking about like, oh well, you just think 5 years out this thing's cheap. Like, of course it's expensive on today's revenue. But 5 years out, it's going to grow by this much, and then it's cheap, so whatever. And it's like, last I checked, we were 6 months away from you crying. Right? Like, it's this old thing, and it's not so old because it's just been shown. Like, when everything is panicking, everybody's time horizon shrinks to tomorrow. And boy, when everything's up and to the right, just think 10 years out, you'd be good. Yeah, because nothing bad can happen over the next 10 years.
Yeah, that was a great Twitter account. I forget who that came from, but at the top, everybody's time. Was it Skellycat? At the top, everybody's time horizon is infinite, and at the bottom, everybody's time horizon is zero.
Yeah, that was him. He said that to me, and that's stuck.
It's true. It's absolutely true. I mean, and we're closer to infinity here than zero.
It was his PM that said it, to be fair, but that was a good saying. Thank you to that PM.
Maybe there's a good like gamma Hulk joke to be made about Mr. Market. Like he's all hulked up on gamma rays or something.
Yeah, Hulk.
It's best I can do. Sorry, Corey. Tip your waitress.
I mean, so here, Corey, if you want to hop back in, how does the gamma, I mean, I know the gamma is the amount of delta in your next move, right? So what is it, just that the options, the embedded leverage in the market is so much higher that you have a lot more gamma risk now? Is that like what's going on? Because I don't fully understand once you get into all the Greeks. I know delta, I sort of know gamma, I get theta, I don't get the rest.
Isn't it just the delta hedging to keep the fact that they can put a big position on way out of the money that you have to now delta hedge
when they're delta hedged, they leave themselves gamma open or something like that, right? Because as the next move goes, then they have to hedge more delta, but they're exposed to the gamma.
Ben Eifert described it a little bit in a tweet series that I'm going to slightly mangle here, but basically a $1,500 premium option bet, which lots of people can punt at that level, can create $230,000 in buying as the delta hedge is put on. The option moves up, stock moves up. Need to hedge again, and eventually you end up with $230,000 exposure, which is massive kind of leverage to that.
I don't know. I can't see what would possibly go wrong with a company who has figured out how to gamify investing and drive people towards options and margin. I can't see why that would create distortions. especially when we can all agree that tech is not effective at getting us addicted, right? So, I mean, I don't see how any of this is worth discussing.
Well, and doesn't the short-term nature of these being out of the money call options mean that this can go on and the price can sort of keep up with it because they're forced to hedge, but eventually you reach a point where it's all those options are zero, and now like the game is just over in one round. Is that right? Is that the right way to think about it?
I don't know that the options expiring worthless would matter because somebody makes money in that scenario.
I mean, whoever sells options, but not necessarily, because
right.
if you've had to hedge into it, if you had to hedge your option sales, you may still be down on the position.
It seems to me you've got a tightly pulled rubber band, right? Everybody better be doing what they need to do quickly in order to avoid it.
The thing is this unique? Like, is this
Probably
new?
not.
Like, I just kind of all of these theories floating around for passive flows and like options and all this stuff. There's always an analog for this stuff. It's all happened before. It's not the first time we've seen this. When the market gets like bubbly, bullish, booming like this, it runs up in parabolic way and then it turns around and it goes the other direction. Happens so many times in the past. I don't know how we can look at this and say, oh, this is all brand new.
The ETF flow thing scares me.
Why?
It just does. Because I don't know enough to disprove it with data.
It's
I
as
just
liquid
need to
as the
sit down
underlying.
and do the work. Yeah.
So, so if the underlying's illiquid, then it hasn't changed anything. Maybe there's more money in it, but I think that all the boogeymen, we've seen it all before. This thing will turn when it turns. It'll break down when it breaks down. Don't worry about it until that happens.
8 more innings, folks. Hop
Well,
on.
it may very well be. I don't know. Like it might be a 2040 top.
Oh my God.
It could happen tomorrow. It might have happened at September 2nd. We don't know. You don't know until a year
You think it
after
already
the event.
happened? In the bottom of the first?
It's possible that
Come
September.
on, man.
It's
That's
possible.
a short game.
It's possible September 2nd was the top. Possible.
Wow.
I don't know. It's possible also that was not, and that was just the end of the first inning. We've got 8 innings to come.
That's right.
No one knows.
Held up.
Well, why not? Like I said,
I don't know. That's what I've been saying for a year.
It's not any dumber than everything else.
some conversation. Like I talked to Chris Cole in 2012. We were talking about, Greenspan just tapped the accelerator in the late 1990s, and that created the tech bubble, right? He just reduced the interest. For a long time, he'd been trying to keep gold price pretty stable. It looked like there was a little recession, so he dropped interest rates, and you get the dot-com bubble. So then, for the last decade, we've had the accelerator firmly to the floor, rocket fuel in the tank. And what does that do? I mean, it could easily be the mother of all stock market bubbles.
Hey, we've gotten 25 cents worth of GDP for every dollar spent there, right? Well, that's a little bit flaccid.
The
stimulus.
The money multiplier is it's fallen off a cliff. It does not look healthy, but who knows? I mean,
Ride or die Keynesian.
well, it's MMT's the new, you don't need to pay taxes or anything anymore. You just print it. I mean, and it seems to work.
Yeah, well, it creates massive distortions in society, in my opinion. But
it doesn't work in theory, but it seems to be working in practice. So
I don't know. I don't know if you can look at politics around the globe and think it's working, but I agree in financial markets it does. I was playing around with a beloved tech company today and building a model to figure out the valuation, and I determined that I cannot get my brain there. And then I pulled up, I was like, I wonder what the Form 4s look like. And it's just people selling like gushers. And some of the people that are selling today were buying in March. It's like an actual fund that bought and is now selling. So it's not so easy to just be like, oh, that's just like normal options exercising. So I find it interesting when Twitter is buying from insiders. It's not necessarily a sign, but it's interesting.
The problem is that
Right?
insiders
There's
sell
a
all
lot
the
of
time.
reasons people sell. That's exactly right.
So it's hard to tell. Whereas they only buy for one reason.
Yeah,
That's something I've been
fair.
asking myself a little bit lately is Twitter Mr. Market now?
Yeah, a little bit.
Is it, or is it like enough of a little FinTwit isolated thing where it's, you know everything earlier than 95% of the rest of the market participants?
Is Wall Street Bets Mr. Market?
I don't know.
That
I'll tell you
Mr.
what,
Skilling Twitter handle tweets out Wall Street Bets every afternoon. It's hilarious.
Dude, Mr. Skilling.
I do kind of like those dudes.
TikTok Investors is a good follow too.
TikTok
Have you seen
Investors,
that
yeah,
one?
classic.
That's pretty good.
I think Twitter made me much smarter. So there are times it makes me dumber, but thank you all to anyone that's listening that participates.
Is there an echo chamber and other people's voices that you're putting into your head too much?
Bro, I tweet out about Wells Fargo and fucking Curate. You think that I'm part of the echo chamber? I get shat on like crazy when I come out with my ideas. Why would you own a bank, you dumbass? I have in my inbox is filled with people telling me why I'm wrong. I'm like, I get it. You guys don't like this stuff. Selling stuff to 50-year-old women and like a bank. Yes, let's talk about tech now.
Why are you inviting that abuse?
I don't know, because I think it's good for me. I think it helps me think through stuff.
I mean, that's the way to. As long as you can separate it from yourself and you can get the ideas and not internalize them, then
I did get a little triggered like last week or something. I sort of responded to somebody a little bit more angrily than they deserved, and I had to subsequently apologize for my behavior. But I was like, man, I've been getting trolled for a week. I'm sorry.
Yeah, that must be tough.
I know you know. The difference is they do it to you publicly.
Yeah, I literally don't care anymore, so go hard. The mute button is my friend quietly paddle over, press mute, bye.
That's right, yeah, well, maybe one day if I can write a book half as good as yours, I'll get the haters, like for real.
Yeah,
in due time.
The time to do it is right at the end of your strategy working. So when the book comes out, it's just misery for like the 6 years that comes after.
Yeah, you top tick that one.
I wish I'd known.
When did Deep Value come out?
2014.
So what'd you do? You did quantitative value or
2012.
Okay, and then when did concentrated investing come out?
2016.
Huh. I didn't realize that was after Deep Value. All right. Well, there you go, folks. Now you know Toby's timeline. At least most of it.
That was a good project. It was a fun project, concentrated investing.
How many guys did you study that blew up?
None. So it's a little bit,
but it's survivorship bias, sir.
It was interesting because it's Glenn Greenwald from Brave Warrior, formerly Chieftain. And part of the reason for the separation there, reading between the lines of that interview, was that the other folks who've stayed with Chieftain preferred a deeper value style, and Glenn Greenwald's more of a prefers better quality, faster growing stocks, and that's probably been the better bet since that came out, since 2016. There's guys in there like Christian CM, who's the Nordic Warren Buffett. I hesitate to say that, but he's like an oil and gas guy, so he's got a great stock, SEMUF, pink sheets traded in the States, trades by appointment only, and I think he buys most of them, but you can tag along there.
That's gangster. You trade by appointment only. I don't even know what that means.
It just means it never trades. It just doesn't trade.
Okay. All right. Well, I like that.
I have owned it in the past.
So you got to sell it.
Yeah. I've owned it, but I just... current projects exclude
anyone on Twitter,
anyone want to buy this
stock for sale?
There's definitely some selection bias in it. I was pushing hard for the investor. I just can't think what his name is, but he's got a 25-year track record. Atlantic Capital, Alexander Ropers. I was trying to get Ropers in because he's got a very long track record of outperforming, and he hasn't done so well since that book came out. So the co-authors were right on that one.
Do we have any more questions we need to address?
I think we're coming up on time.
I'll tell you what, some of y'all ask how concentrated we are. My IRA, which I do not treat like my PA that I actually care about, is very concentrated, and it's running right now, and that is not easy to handle. So
you get the bends, mate. When you go when if you're a value guy and nothing's worked for a long time, when stuff starts working, you get the bends. You know that. You know what the bends is? Deep sea divers who get the nitrogen
when you
in
come
the blood.
Up too quick,
come up too fast.
End up in the fetal position. Yeah, put me back down. Let me lose money.
This is the problem for value investors, and I've had a lot of time to think about it. It hasn't ever happened to me, but when the portfolio works, or some stock works, you want to sell out of it as fast as you can, because you got to crystallize those winners. You got to pull your flowers, water your weeds.
Yeah.
No, don't do that. It's the other way around.
Sort of what's going on.
All right, folks.
Have a good one, folks.
That's time. Thank you.